All right, so let's go ahead and get into the Monday Agent Huddle. I love this because this is the big one, guys. Time for the market update, the everything real estate related. It has been a huge month on so many levels. Okay, so here we got the stat newsletter. Now, the stat news, Doodlebug, can you close your door? The stat newsletter is our monthly update where we get the numbers year over year, month over month. And they are put together by some of the top economists, MLS marketing. I mean, you have the top brains handling these things, right? This is the actual MLS numbers. So the good news is that it's everything in the MLS, 100% factual. And that's one of the benefits of being a realtor is that we are held to the highest standard possible as far as accounting, reporting, keeping the numbers. I mean, it's all in the system, right? So it's and we have very harsh penalties for not adhering to it. What it doesn't have is all the off-market activity, right? So about 90% of wholesale homes, for example, don't go through the MLS. So realistically, you're only seeing here about, let's call it 2/3 to maybe 3/4 of what's actually happening in the market, okay? So remember that in the back of your mind because the numbers are actually even bigger than we're actually seeing here. Make sense? Okay, so right now we last month we had 8,573 sales for November. Okay, now the big thing is month over month, that's pretty good. We typically don't go up in November, but we did just a little bit. But year over year, we're down. Okay, now my first question for everybody is, being up month over month is good because that means we're on the right trend for this year, right? But year over year, it's down by a little bit. Now, what do we think led to that? Well, do we think we had just overall, do we think the market's down compared to last year? Do you think it's a supply issue? Do you think that the market's just slowing down in general? You know, there could be a couple different triggers that we think we're seeing a year over year decrease of 3.5%.
Well, I don't know. From what it's coming up here, the market's gonna blossom over the next 6 months.
That's so true. That's so true. All right. Well, the big thing is inventory. All right. Inventory month over month decrease of 15.2%. Okay. And year increase by 3.3%. Okay. So it lets us know that month over month, we had way less homes, but we're still up by a little bit. Okay. So what's interesting is between price, holidays, the market fluctuation, this is just crazy how we had a month over month decrease of 15.2%. Okay. When you have 8,500 sales in 1 month on average to 8,800 last year. Okay. Is that enough homes to offset each other? Or did we just guarantee we just shorted ourselves by what? Almost 10%? Isn't that crazy? Literally, we sold 8,500 homes and only put 7,800, 7,900 back on the market. So boom, that is huge. So it's really interesting. November is just one of those weird months. Okay. So realistically, we're going into Christmas. You'll see for December. So the numbers are going to go down even more. And then we'll see come January, they'll start creeping back up. And then February, we typically see the explosion. right? So right now, that's crazy to see that few people put their home on the market compared to month over month, year over year is interesting. Okay. I don't know if last year or in October, we just had an insanely productive month, maybe, right? Because to not have that many homes is just crazy. So year over year, we're still doing pretty good, but month over month, that is a huge drop. Okay. So total inventory right now, 10,951. All right. See where we were last year?
Yeah.
We dropped significantly. So everything you're saying, Bill, obviously supply and demand. So what does this mean?
Yeah, that's handyman number one, I think, dropping the ball there.
Yeah. So we've got our inventory is still down, and you can see here and my pictures. All right. So you can see we're month over month down 5, year over year down 12.
Yeah.
Supply it's not changing. It's not changing. And we have millions and millions of people in Phoenix, and we have hundreds of thousands of people coming each year. Okay. Hundreds of thousands offsets the amount of homes being built. Oh, and we didn't even talk about that. Wholesale is not on the market, but most of your new homes aren't on the MLS either. They'll put like one of the model up there and just keep it up there and then sell all these new homes, right? All the lots. So there's thousands of homes missing on that side too. So the hundreds of thousands can be offset, you figure, with the new homes, but they really can't keep up there. So needless to say, you have to have in Phoenix, you have to have a very robust resale market. Unless you want like a third of the people in the valley working construction, you know what I mean? And everybody saw what happened in 2008. So this is crazy. Okay, so we are down. And what you're going to see here is that Bill, and I love having new people on this meeting because it allows me to share the same information, but feel like it's fresh. So we've got 10,951 total inventory, but here's how it's really broken down. Okay. So we have active. This is under contract, but accepting backups. That's what UCB means. And then here we got contract contingent, basically on the sale of the seller's home, right? So it's a contingent sale. So they have to sell home A in order to buy home B. Make sense? Okay. So you've got 66, but both of those are still under contract. Okay, so don't get me wrong. They can't just arbitrarily walk away. There's money, there's escrow. They are under contract. They put a weird designation behind these, but for all practical purposes, they're not active. Okay, so according to them, once you remove all these, we are actually down to 7,230 homes. Okay. Wow. So that the total inventory of 10,951 is actually not accurate. It's actually 7,230. So if there's really 7,230 homes on the market, let's come back up here. Monthly sales, 8,573 sales. Can somebody break out their calculator really quick and divide 7,230 by 8,573.
It's 0.84.
0.84. So we have approximately 4 weeks inventory on a 5-week month. We have less than a month's inventory. Okay, and just as a reminder for everybody, a normal market is 3 to 4 months. Okay, so let's put this in perspective. What's 8,573 times 3? $25,719. That's what we should have. Okay, we have 7,230, and we should have over 25,000 homes, people. That's crazy. So, needless to say, we already proved this wrong. Okay, so they got it, and they have it wrong significantly dealing on numbers of this size. When you have 0.8 of a month, that's a big difference than 1.2. I mean, that's like almost 50% off, literally. So, nope, we've got that. So what does that mean about new list prices? Obviously. Look at that. Okay, when was the last time you had stocks performing at 30%? Look at that. Look at this. New list price up year over year.
Yeah.
19%, and then the median is up 30.3. So since we really don't worry about the averages, we really worry about the median. That's the 30.3. That is incredible, guys. 30%. Bella, good job buying you guys getting your house.
Yeah.
Isn't that insane? Right? So what are you guys' thoughts on supply and demand and what you see here before we move any further? Because we're going to get into what they think prices are going to do and things like that, right? So if there's 0.8 months of inventory, you're dealing with a market. Phoenix, Arizona has approximately, let's call it 4 to 5 million people in Maricopa County. Okay. It could be more now, seriously. Let's call it 5. All right. 5 million people. We only have 7,000 homes.
And Josh, when was the last time you adjusted prices for your handyman work?
We raised, well, we have our pricing structure as of last year-ish, earlier this year. I'm kind of, we're always adapting it a little bit. Yeah, but okay. So we got our 30% up. Okay, so the sales price. All right, obviously that means sales prices are going to go up. All right, so if that's the new list price, here's up, boom. Sales prices are up 28.1%, 22.5%, literally. So if it's listing for $429.9, it's selling for $424, and that is within what? 0.1% sales price? Isn't that 1% essentially sales price, a little bit over? Yeah. Because that's $5,000, essentially $6,000 off. So it's a little over 1.5, something like that. So needless to say, homes are selling, and homes are selling for pretty much at asking price on average. And we're talking well over. Now we're talking 4.25, guys. It's not barely 4, it's 4.25. Our average home in the valley is $424,000. All right, we're pretty quiet, guys. Okay, so they think next month we're gonna go up another $1,000. So that's a little slower, but it's kind of interesting because here's you've got the average, right, which is going up significantly, but the median is where the ball really lands. Homes over, let's call it 800,000, 900,000, that's a different market. Homes under $500,000 are one market, but if you really want to get down to it, if you can find a home under 400,000, that thing's selling like hotcakes. And if you get a home around 250, it's probably going to have 20 some odd offers on it. Okay. So what's that?
Said, yep, experienced that already.
There you go. This is the hardest part. So I was talking with a new agent yesterday, not new agent, but an agent over at, she's pretty new, I guess you could say, right, Molly? And so she was talking about having entry-level buyers. and how they had their work cut out for them because she's helping rentals and helping entry-level buyers. Okay. Now, here's one of the hardest conversations, and I'd like to throw this out there because what's really interesting is that it sounds expensive until you compare the rentals. Okay. Your average rental right now is over $2,000 a month. So if we lay the foundation that they're not going to necessarily not buy a home because they're still going to be paying a monthly payment. Makes sense? There's no way to get around it. If somebody wants to live, they have to have a house, which means they have to have a house payment of some sort. You know, whether you paid cash for it or you're renting or you have a mortgage, you are paying for that home, right? So under that foundation, what do you tell entry-level buyers that are trying to qualify but are either reluctant to buy now, knowing prices are not going to stop, guys? Prices are not going to stop going up. So question number one is, what do you tell the person that thinks, well, I, you know, it's a lot of money for me right now. I want to wait because I want to save money if possible, right? For a first-time home buyer, what would you tell them? And I know, Marilyn, you're the only authentic, real agent here, so not to put pressure on you, but what would you tell a first-time buyer knowing that the market's wonderful, right? Should they buy that house, and is it going to pay them back in equity over the next year, basically guaranteed?
Yeah, but you can't save enough money for a down payment. You got to deal with what you have. They should try and see if they can get qualified for something.
Exactly. So they should, no matter what, see if what they can qualify for.
Yes,
I absolutely agree.
Don't wait.
Yeah. Okay. And so, well, I think prices may go down soon. What would you tell them?
It's not likely. No.
Well, just the inflationary trend alone is at 3% a year. Man, that's got to have a lot of equity in a house.
Yeah, isn't that rivaling, like, what was it in the early 80s? When was the last huge inflationary period? Was it in the 70s or 80s?
81.
Because that's what drove the really, really high interest rates, right?
Yeah, right now it's low.
Yeah, absolutely. Okay. So
you got an inflationary trend locked with a low interest rate. That's a win.
Absolutely. Money's cheap. It's getting expensive, but at the same time, it's not worth as much, unfortunately. But if you could borrow and that's the thing is, like, okay, compare it investment wise. Let's say you have let's say you take out a bad loan, right? It's a bad loan. That's like 7%. Okay. If you get a freaking, basically, private money loan of some sort, which they will do on permanent terms. It's not always interest only. You can negotiate oftentimes. So let's say you take out a horrible 30-year amortized loan, but it's a 5-year loan. Okay. Well, even at 8-9%, it's still going to freaking, oh my gosh, it's not going to change. This is just incredible. The amount of appreciation, the amount the market's coming is just going. And so here you go. Here's their increase. Like I said, it wasn't going to be huge. Distressed properties down, 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 and down. And again, we're talking over, out of millions of people, we're talking, there's only 811 people in the process. Okay, this doesn't mean they're definitely going to get evicted. This just means they basically are in the process, have a date scheduled, and the timeline's on of some sort, whether they're going to sell their home, refi, whatever it might be. You know what I mean? So that's not even guaranteed short sales. So distressed sales. So the actual sales, 10, total distressed 11 for last month. Okay, so if you want to wait at the courthouse steps for 30 days for one sale every third day, where there's probably going to be huge competition, go for those. Average days on market, surprisingly enough, month over month went up 3, but that's not really a surprise because November is holidays. That always happens. Okay, it's just one of those things. Okay, so year over year though, we're down, which is the big thing. Okay, so that really puts it in comparison. It always goes up between October and November, but year over year, November to November, we are down. So that's what matters. Okay, guys. I tried to make this very fast because, typically these meetings go on for like an hour, because I still have a few more things I want to show you pertaining to supporting this market. I would like a quick one-line blurb from, if you don't mind, from each of you really fast. Just what is your opinion of this market? And B, if you had, if let's say you had $1 million right now, what would you do with it?
Yeah.
Would you put it in the stock market? Would you put it in a mutual fund? Would you go out and try to buy some real estate? Would you go out and buy a really nice house for yourself?
Honestly, I would probably, like, the market I think is ridiculous. That's my one line blurb. I think it's ridiculous.
Good
And
blurb.
with $1 million, I would just pay off all my debt. The idea of being debt free is honestly a little shocking. And I'm only 26.
Yeah. So, but hopefully you don't, at 26, hopefully I hope you don't have like $1 million worth of debt. So would you, would you go out and buy a couple homes for cash then? What would you invest the difference? Like, and that's kind of, pay off your debt, obviously. Yeah, absolutely. 100%.
Go back to school.
Sweet. Okay.
I feel like I wouldn't buy any real estate because I feel like if you just wait, then the market might go back down and then it won't be as expensive.
It won't be worth as much eventually.
I love this. And thank you, young, I guess, quasi-millennials for this perspective. Because as realtors, as a brokerage, this is what we battle every single day. And what's ironic is that I just spent 25 minutes telling people why you shouldn't do that. And we still have that same response, which is very illogical and doesn't necessarily make sense. Okay. So number one, to make that decision, and this is the hardest part. So please give me feedback, because if we convince you guys, we can convince everybody else outside. Make sense? Okay. So when do you think, based on these numbers then, because you're thinking, you said the market's going to come down. When would you guesstimate, based on what I just showed you, that the market would?
I mean, based on, honestly, I think you have to look at a little bit more than just what this market is looking like. Our market in general, people can't afford it. I think the market's not going to have much of a choice but to go down unless they're going to have an entire city worth of homeless people, which is what we're working at. We can't, the cost of living versus what people are making and what they can afford to do isn't equivalent. So I don't think the market's going to be able to stay that expensive unless they're literally going to just, like, what are they going to do when nobody can pay their mortgage?
Bill, do you have any responses?
Yeah, we saw that in Canada as well. People are not buying because the inflationary trend and the trend of the real estate market has put them pretty much out of reach for the average person with a family, raising a family. So they're not buying. They can't afford it. They got to rent. So my initial, if I had $1 million, I'd probably get into a rental property as opposed to buying hard real estate.
Absolutely. I want to grab my trusty calculator here. So, Bella, you brought up some great points. So let's kind of take those one by one here, because number one, believe it or not, Arizona is actually one of the top 3 states leading the country in income growth and higher income jobs. And we went from being one of the lowest actual income states back in the 90s with an average income of like $30,000 to $40,000 to now being one of the higher averages. And I'll pull up a number here, but according to the average stats, the average household income in Arizona now is over $80,000. Okay. and it's getting even better. So we're no longer the lower income people. And that's the perfect segue to my next thing. Thank you. Okay, so number one, press release. Mayor Burger, I forget if Meyer Burger, I always say that wrong. They're bringing a solar factory to Goodyear, and it's going to add a couple hundred jobs. And these are engineering, higher income, better paying positions. Okay. And it was advanced. Here you go. Community shows Goodyear is an excellent location for advanced manufacturing business, highly skilled workforce, modern infrastructure, and low cost of doing business has created an environment where companies can thrive. Okay. So that's hundreds of new jobs right there. So that's one example. Happy holidays, Arizona. This was the Arizona Commerce Authority email. And Doug Ducey announced that has gained back the total number of jobs lost during the pandemic. And we're actually tied for our lowest rate since 2008.
Yeah, I agree. I was here in the 90s when things were down, and now I'm back. And yeah, things are looking really good for Arizona, a lot better than Canada. And yeah, just trucking jobs alone went from like 40,000 a year to 100 grand. So yeah, people will have money to spend, but it will trigger inflation.
It already has. You like, and honestly, and I think it might just be that I'm born and raised in Arizona, so I've never lived anywhere else. I only know what our economy looks like, and I'm also fresh out of high school. All the people that I know are the people in the workforce. So the obviously income's gone up. My income has gone up. People are being paid more for those jobs, and they still can't afford their bills. So what is that saying? I understand that there's more jobs coming available. Amazon obviously just moved here. There's a whole bunch of people that are working higher for what they're considering higher wages. I use that in very strong quotations because they're still paying. They are higher wages, but nobody's putting a cap on how much inflation can happen when you raise wages. And until they put a cap on it, all they're going to keep doing is paying people more and then charging them even more than that percentage increase.
Well,
I haven't seen it yet where.
But you're going down an economics rabbit hole that's not necessarily accurate. It's my point that I'm trying to prove here, and it's right here in the numbers. Unemployment is at its lowest rate ever. And when you have people that just graduated high school, I think what that really boils down to is they need to be patient because you're just entering the workforce. You're going to be at the lowest end because you're entering the workforce. That's what's supposed to happen. It's always, that is always going to be it, until you get the either higher degree or the education of different varieties or the experience. You have to be put on the job. You get put on the job, and over time, raises and things of that nature. So the point being is right now, factually speaking, jobs are paying, all jobs to battle. This is where I don't want to go down. You have to be very careful not to go down political things. Okay.
Right.
The fact is we need to cut it off at the fact that there is inflation. Okay. And that's a fact. But right now, real estate is stronger than it's ever been, and we are in real estate, and that's our business. Right. And our job is to sell real estate in good times and bad, and to find the angle that makes it make sense, that is beneficial to everybody. Okay. And right now, I don't even have to do that because our Arizona market, no matter which way you cut it, is one of the strongest economies in the country. So to say that there's not people struggling is in any economy is a fallacy. There's always going to be people struggling. But the fact is 95+% of people are employed, which means it's right there. It's 4.7. So out of 100 people, we're dealing with less than 5 are unemployed for whatever reason, which is amazing. Okay. And the jobs that are coming are actually huge, and there's no shortage of them. So let's keep going. So you got this company here building, there you go, manufactures sustainable homes as a portion of Navajo generation. The spotlights Arizona record venture capital deal flow for startups. Okay. Record venture capital deal flow for startups. Okay, further positioning, the high-tech leader, and I thought one of them, oh, here we go. Material science company Footprint International announced a new partnership with Gore Holdings. The combined entity would be valued at $1.6 billion, located here in Phoenix, in Arizona. Fox Business Journal said, Intel plans to reclaim America's semiconductor dominance, highlighting the chip-making giant's historic $20 billion investment in 2 Arizona factories. And I think it's funny because the Intel executive's name is Tom Brady. Anyway, so our economy is insane. All right. Now, here's what I really fast because sorry, I got sidetracked there. When it comes to the amount of money for the rental versus the purchase. Okay, so number one, jobs. I think patience. Does anybody have any better answer? Because to say that people aren't going to be on lower end, because I think it's funny that if you go to the corner right up here, you've got Sonic that can't find anybody. You've got Brothers that can't find anybody. You've got Walgreens that can't find anybody. You've got Mi Familia. You've got I'm like almost everybody right here is saying help wanted, help wanted, help wanted. The pool company is looking for people.
That's because they're saying help wanted, they're advertising wages, and then when they actually hire you, they lower that advertised wage. There's been a few people who've done studies about it in our city.
Alrighty. So going back to where we were. Security. Okay, so let's say the average home, okay, with FHA maxed out right now at 356, anybody looking to go beyond that will inevitably, oops, I hit the wrong freaking button. Darn it, cancel. There we go. Let's make it easy and just say that the person's going to have to do the, let's make it, keep up beeping through when I'm trying to do this, figures. Okay, there we go, loan type. Okay, so let's do a conventional loan. And we will go down because in a lot of cases right now, they went out of their way to rival FHA, so they can get in with close to a 3% down. Okay, so we'll do 3% down payment and we'll call it a 3% interest rate. And then we'll say that they're just basic in Phoenix. Let's call the average HOA $65 a month. And we'll say that they're going to close exactly 1 month from today. And the actual average home price was what again?
I'm not sure what they are in Arizona. In Saskatoon, Saskatchewan, the average home price is just about out of reach at about $250,000.
That's interesting. The average home, as we showed here, was literally $424,000. Okay, so $424,000 puts the monthly payment with the absolute minimal down. Okay, so if you include closing costs and everything, not asking, I mean, total 100% normal splits on everything, right? No assistance, in other words, $24,805. Okay. And the house payment would be $2,606. Okay. Yeah. With the absolute basic minimum, which there's a lot of options in there. Okay. So $2,606. Now with your average rent, let's go and switch over here. This is what we found. Okay. November average rent, $2,262. Okay. Your median lease, $2,005. Okay. So with the absolute minimal down, technically, if you include all the averages that way, it is now more affordable again to rent, as we discussed a little bit ago. Okay. But that's not necessarily going to be sustainable because obviously people are needing to purchase homes to rent them out. Okay. So to put this in perspective, and this is why real estate is always a wonderful, wonderful, wonderful investment. If we take and we put the down payment at because your average investor has to put at least 20% down. Okay. So let's say he puts $85,000 down. He or she, sorry, did not mean to say that way. Done. let's say they put that, and then that now takes the payment to, come on. Barely after taxes, insurance, everything, it's barely $2,000. Okay. So an average investor would be able to rent these out and basically barely cash flow with the basic minimum that they can put down. If they put 25% down or 30% down, they'll be cash flowing, no problem. Okay. But it all makes sense. If you're going to buy a home, it's your primary residence. You're going to invest in it. And people forget about the long-term benefit. Marilyn, what are about 3 or 4 long-term benefits that truly, yes, you're making a monthly payment, but that's a monthly payment made for a reason as opposed to renting.
What do you mean? You get equity for owning it, living in it.
There you go. So
Well,
you're,
time.
so you're building equity.
I
Okay,
guess
and right now the market is on fire. So not only are you paying down, but the market's going up. So
you get write-offs if you're renting it.
well, even homeowners, you get to write off a lot. What do you get to write off, for example?
Taxes, period.
There you go.
Period.
Yep. And a lot of your interest. And then you got to, I mean, there's a lot you get to write off when it comes to your primary residence. So it's of your monthly payment. And this is where, because you just recently paid off your house, right?
Yeah.
Okay. And what is the benefit to you now to not have a house payment whatsoever?
Don't have to make that house payment. Mine's a different situation. I'm basically not really making a lot of money. So I'm not even saving that money that I didn't have to pay now because I'm not balancing it off with any income in real estate. I'm using it myself.
Yeah. But thank God you don't have it, because what if you did have to still make a house payment?
Yes, it would be difficult.
See, and that is the long-term point.
Yeah.
You have to remember back in the 80s, up until the 80s rather, 60% of a person's net worth when they retired was their home. You get your pension, you got your whatever it was, your silver pen or gold pen when you retired, and then you lived off your pension and you didn't have a house payment. And that was the historical way of doing things. Okay. And as time goes on, more and more people do not have a structured retirement. Pensions don't exist anymore unless you're working with the state or very few others, military, state, and can you think of anything else really? I mean, government, basically, that's it. So people have to plan for their futures.
Yeah.
And unfortunately, we suck at that as a whole. And people need to remember that you're not going to be healthy forever. You never know what's going to happen. And your home is one of your biggest hedges against any issues. Let's say you bought it today. Okay, yeah, you're spending $425,000. Guaranteed by next year, it's going to be worth $460,000, $480,000. Okay. And you would have had now made payments and you would have not really broken even. You wouldn't have really paid down much, but worst case scenario, you could sell your home and it won't cost you anything. You could probably walk away with a couple $1,000s. Best case scenario, you might be able to borrow a little bit of money and take care of whatever you need. And you get to borrow it at such a great rate. I mean, it's wonderful. Okay. HELOCs and different varieties are amazing today. So then let's fast forward 15, 20 years. You've now paid down a significant portion of your home. And let's say something comes up. You're safe, right? You have some stability. Now, fast forward to everything goes perfect. You retire at the age of 60, whatever. And at that point in time, you've now owned your home for over 30 years. You don't have a house payment. Let's say you're living off of Social Security. Let's say you have some medical issues. The amount of the ability to survive and stress-free and be able to have a quality of life at that age means the world. And that's what we need to remember, that we're truly selling to people, is that stability. It's that future. It is that retirement. Your primary residence is never an investment in the stereotype, in the terms of a rental or a flip. It's not that. The moment you take out your mortgage, it's done. You know what, Marilyn, when you look at the amortization table when you sign your loan docs, isn't that the worst thing in the world?
30 years.
And you see that your $250,000 home is 400 plus, you know?
Yeah, but it took so long, Josh. I bought my house in 2003 for 160. Let me think. It was still 250 in 2020. That took all those years, 18 years. It's ridiculous. Then it went up $100 grand in 1 year.
That's it. That's it. And that's it. And that's where you were patient. So many people freaked out. 2009, 2010, 2011, 2012,
Right.
2013. Everybody freaked out. That's what caused the problem. We had 70,000 homes listed at one point. 70,000. We have 7,400 right now. We had 10 times that. Okay, that was the epitome of, yeah, you could pick up a home at $68,000. And that would have been the time. You know, when was the best time to plant a tree? When's the next best time to plant a tree? You know, that's it. And it's amazing the difference. Okay, my grandparents, they bought their house in Palmdale, California in like 1968. And when he retired for the second time, I think it was, from Sears, he was able to take care of my grandma. They had a motor, they had a fifth wheel, they were able to travel, and they had a wonderful, wonderful retirement. Was he rich? Oh, frick no. You know, he worked with the military. He retired from the military, and then he went and worked and sold hardware at Sears. I remember he sold all the lawnmowers, the riding lawnmowers, and I loved it. I always went in there and pretended to drive. So that was the ability to retire. You're looking at Marilyn right now. That's her ability to survive today. The benefits of owning a home, I hope I'm conveying it. I drink my Kool-Aid, obviously, because I wholeheartedly believe. My dad never made more. And Molly, do you remember? Because I remember seeing Grandma. She used to have us put the checks in. My dad pastored a community church. Yesterday was his final day after almost 23 years, 24 years almost, pastoring that church. They never took home more than $400 a week from that church. And on top of that, my parents would give back 20% or more, because that's the type of parents and type of pastors that they were, right? If it wasn't for the ability to invest in real estate, my family wouldn't have survived. It enabled us to have a wonderful, wonderful living. And we're not talking, you know, we don't own 1,000 apartments. We don't own all these glorious houses. My parents literally made a killing owning 6 or 7 manufactured homes on pieces of land in Black Canyon City. And it allowed them to a great living. And now that they're selling them, it's all worked out and they're able to move on. We didn't do the brokerage till 2015. It's a new thing. My dad's been a pastor for 40 years. You know, it's an amazing, amazing thing. And this is a historic time in real estate, no matter which way you cut it. Rents did go down, just so we are aware. Here was October, 2100, 2308. And here's this month, down $5 and down about 50. And then you'll see that the days on market was 20. Now days on market are 22. So the rental market is definitely softening. So Marilyn, that's what I was mentioning for you earlier was your rental, that might be what's hitting it, is that over the last month or two, it has softened. Okay.
Josh, in your opinion, what is the trigger in Arizona and the new market?
Several different things. Maricopa County itself is such a prime location. Being in the Southwest, we've got a wonderful climate. the cost of living back in the day was very affordable. So that's truly what started it. And then you have, and this is no, again, not to get political, Doug Ducey, being the businessman that he is with his background, has made Arizona one of the best places for people to come to. And it has just kind of segued and kept going from there. You have the semiconductor company, which just the fact that they're building here probably added another couple $100 million worth of investment from other entities because of what they're doing. You have places like Eloy, which is still very affordable. And that's an outskirt about where Bella is, go about another 25 miles or so. And Eloy, there's 3 or 4 factories, manufacturing facilities going into there, and different, not just manufacturing, but several that are going to bring, I think one factory alone was over 2,000 jobs.
Yeah.
So you have so many places coming here. We're trying to be the global leader. If you get a chance, it's so worth it. Go to the Arizona Commerce Authority. Oops. I can't spell. I'll show it to you here if really fast. Boom, boom. Okay, and right here on the top, you businesses aren't the only thing we scale. So we are the number one nation in number one in the nation for entrepreneurial activity. 4.9% corporate income tax, which is among the lowest. We have 300 sunny days per year, and we're number 2 in the nation in unemployment insurance taxes. And then right now we've got aerospace and defense, advanced manufacturing, technology and innovation, biohealth, et cetera. So these are all the places that are going. This is everywhere they're investing into. Renewable energy is seriously huge. As you know, automated vehicles, there's a lot going on. And then the Arizona Commerce Authority, I forget who started it. One of our teachers, Marty, she turned us on to Arizona Commerce Authority, and she knows the whole history behind it. But they alone are credited for a couple 100,000 jobs, I think, in their 15 or 20 years in business so far, and have brought serious growth. And I think it was Doug Ducey who tasked them, or it might have been the governor before Doug for that. Forgive me if I'm wrong. So, yeah, if you get a chance, check this out, because you will be amazed at what's going on around. And then if you don't know much about the Taiwan semiconductor facility, that's definitely worth checking out too, because that place is, here we go. Boop.
There's another one right off the 303.
Yep. Yeah, you can't miss it. Actually, let me see. Arizona, there we go. All right, and if you go to, let's go news.
Oh,
There you go, flocking to Casa Grande. Ooh, so they're going from the North Valley to the South Valley. $12 billion investment. And then you got PR Horton doing land, $83.5 million land auction near there for building. It's insane. And this is right off the 303 by Lake Pleasant. So if you get a chance, if you just look up north, you can't miss those, 12 or 13 cranes just soaring.
Right on.
All right. Well, that's it, guys. So Monday is the agent huddle. I try to keep it typically less than a half hour, but once a month we have the big market update, which is what took place today. So yeah, it's our big meeting, and we send this out to everywhere. It goes out on YouTube. It's so it gets viewed by a bunch of people. So I really appreciate your time. And anybody have any questions before we get going? And seriously, I appreciate your time. 1 hour was a long meeting for you guys, so I appreciate it. So, all right. Well, thank you, everybody. Have a wonderful day. Let me know if you need anything, and you guys are the best.
All right. Bye.
All right.